One big beautiful bill, what it means for business owners. The House just passed a sweeping tax proposal dubbed the One Big Beautiful Act. And while it's not a lot yet, it could become the most impactful tax legislation since the Trump-era Tax Cuts and Jobs Act. In this video, we break down what that means for business owners. Big picture. At a high level, the bill makes many of the 2017 tax cuts permanent. If you're earning $500,000 or more, this could unlock lower income tax rates, bigger deductions, and continued estate tax relief. The bill's next stop is the majority Republican Senate, where they're using the budget reconciliation process. This requires only 51 votes instead of the usual 60-vote threshold required to overcome a filibuster. Cash flow wins. Now let's talk about cash flow. The bill restores 100% bonus depreciation beginning in 2025 and going through 2029. That means you could fully expense machinery, vehicles, and even some building improvements in the year you place them in service. Now, the bill isn't going to restore 100% bonus depreciation retroactively to 2023, like many business owners and real estate investors had hoped. So you're still stuck with 80% for 2023 and 60% for 2024. Section 179 limits are doubled too. It's all about freeing up capital so you can reinvest faster. What do you think 100% bonus depreciation is going to do for G-Wagon sales? Comment below. Here's a big one for innovators. In 2022, in the Internal Revenue Code Section 174 changed the game. Some might say ruin the game by forcing businesses to amortize R&D costs over 5 years instead of expensing them up front. That crushed cash flow for a lot of tech-heavy and manufacturing businesses. Under the new bill, immediate R&D expensing is back for 2025 through 2029. What qualifies as research expenses? Think wages, supplies, contractors, and indirect expenses used in developing new products, improving software, refining formulas, building prototypes, and even some design and engineering work. If you're investing in future growth, those costs are now a straight deduction. No amortization, no more waiting. Foreign paid expenses will still be amortized over 15 years though. What do you guys think about allowing immediate deductions for domestic R&D activities while still forcing companies to amortize foreign over 15 years? Let me know in the comments. SALT deduction cap raised. The state and local tax deduction cap, SALT for short, is now getting a major lift. Under this bill, the cap jumps from $10,000 to $40,000 starting in 2025. That's great news if you're in a high income tax state like California or New York. But, and this is important, that full $40,000 benefit phases out for high income earners. Specifically, if your modified adjusted gross income is between $500,000 and $1 million, it begins to phase its way back down to the old $10,000 cap. Where do you stand on state and local tax caps? Should we be able to deduct 100% of our state taxes, none of our state taxes, or somewhere in between? Let me know in the comments. For S Corp, LLC, and partnership owners, the qualified business income deduction, or QBID for short, goes from 20% to 23%, and the income thresholds get simplified. This will be a marginal boost for most, but definitely better than QBID sunsetting at the end of 2025. What are your thoughts on the qualified business income deduction? Should high income service businesses be able to participate? Should there be a similar deduction for employees? If you have any questions, drop them in the comments. Real estate gets love. Real estate investors, you're in luck. Under current law, the limit on deducting business interest is based on EBIT. That's earnings before interest and taxes. But real estate businesses have massive depreciation expenses, which gets ignored under EBIT, limiting how much interest you can deduct. This bill brings back the EBITDA standard for 2025 through 2029. That means depreciation and amortization are added back in, allowing you to deduct a lot more interest, especially helpful if you're using leverage to fund growth. Now, this doesn't affect most people because the interest deduction limit only really kicks in for businesses with average gross receipts over $27 million. If your business is under that threshold, you're exempt completely. But for larger real estate developers and investors, this is going to be a big lift. What do you think these rules will mean for the commercial real estate market? Is it going to keep driving prices up? Maybe only certain types, low rise, high rise, industrial, special use? I want to hear from you in the comments. Estate planning opportunities. The estate tax exemption is going up to $15 million per person. That means a married couple could pass nearly $30 million to their heirs without triggering estate taxes. If you're doing wealth transfer planning, this leaves the door wide open. Green energy cuts. On the flip side, if you were relying on green energy credits, heads up, EV and solar energy incentives are scheduled to vanish after 2025. These are not just inflation-adjusted amounts, they're full-on repeals and early sunsets of the Inflation Reduction Act's generous incentives. Many developers and high-income investors are racing to finish clean energy projects before the sunset. In many cases, these projects need to be placed in service before the end of the year. I want to hear from you in the comments. With the increasing energy demands driven by blockchain and AI technologies, should the government incentivize its people to invest in their own energy-producing solar equipment, or is there a better way? Also, what are your thoughts on electric vehicles and credits? IRS changes. The IRS enforcement might get a revamp. The bill aims to lower overall funding of the IRS, but also requires the IRS to use AI to find fraud and errors on returns. Think fewer agents, more algorithms. Also, the penalties for ERC abuse are now up to $200,000 for bad actors. What do you think the impact of the IRS using more advanced AI is going to be? Let me know in the comments. What's next? The bill now heads to the Senate. Some Republicans have expressed concerns, so expect changes. Any changes would require the House to cast another vote or a conference committee to be formed and reconcile the differences. The GOP hopes to finalize it by July 4th, especially since the bill includes a debt ceiling increase. What do you think about the One Big Beautiful Bill in its current state? What do you like? What do you hate? And what changes would you make? Let me know in the comment section. If you're a high-income business owner and want to know exactly how this affects you, let's run the numbers. Go to www.tandvllp.com/tax-planning. That's www.tandvllp.com/tax-planning to get started.